Are you thinking about getting into real estate, but not sure where to start? Today, we're diving into the most profitable type of real estate investment, and more importantly, how you can start even as a beginner. By the end of this video, you'll know what strategy gives the best return, why it works, and how to take action today. Let's get into it. So why real estate? Real estate has created more millionaires than any other asset class. Why? Because it offers cash flow, appreciation, tax benefits, and leverage. Unlike stocks, real estate can pay you every month through rent, and its value usually increases over time. But not all real estate investments are created equal. So what's the most profitable type? Multifamily real estate, like duplexes, triplexes, and small apartment buildings, is widely considered the most profitable type of real estate investment for beginners. Here's why. You collect multiple rents from one property. You spread risk. One vacancy doesn't kill your cash flow. You get better financing options compared to single-family homes. And it's easier to scale your portfolio over time. A small multifamily building can generate consistent income and grow in value faster than most other types. Let's say you buy a 4-unit property for $400,000. Each unit rents for $1,000 per month. That's $4,000 total. After expenses like mortgage, taxes, insurance, and maintenance, you're left with $1,200 in monthly cash flow. That's $1,400 a year in passive income from just one property. And remember, the property's value is rising while your tenants are paying down your loan. Step-by-step guide for beginners. So how do you actually get started with multifamily real estate? Here's a 5-step beginner guide. Step 1, educate yourself. Read books like The Book on Rental Property Investing by Brandon Turner. Watch real estate YouTubers. Join local meetups or online communities. Step 2, check your finances. Pull your credit score. Save for a down payment, typically 3.5 to 20% for multifamily. Consider an FHA loan, which lets you buy a 2 to 4 unit property with just 3.5% down if you live in one unit. Step 3, choose your market. Look for areas with job growth, population growth, and low vacancy rates. Avoid overly expensive cities unless you have a big budget. Step 4, analyze properties. Use tools like the 1% rule. If the monthly rent equals at least 1% of the purchase price, it's worth looking into. Calculate your cash flow using online calculators. Always include vacancy and maintenance estimates. Step 5, make an offer and close the deal. Work with a real estate agent who understands investment properties. Do your inspections, negotiate the price, and line up your financing. Once you close, it's time to manage or hire a property manager. Bonus tip. Here are a few quick tips to maximize profits. House hack. Live in one unit and rent out the others. Your tenants help pay the mortgage. Improve units. Renovate to increase rent and property value. Refinance later. Once your property appreciates, refinance to pull out equity and buy another. That's how investors build wealth over time. Buy, rent, refinance, repeat. Multifamily real estate is hands down one of the best ways to create long-term wealth, especially if you're just starting out. You get consistent income, equity growth, and incredible leverage. If you found this helpful, make sure to like the video, subscribe for more beginner-friendly investing tips, and drop a comment if you're thinking about getting into real estate. Until next time, happy investing.